welcome. You're watching Countdown right here on Bloomberg Quint Live. And what a stellar start for the markets. The indices, the Nifty up a full percent, and so was the Sensex, with the Bank Nifty contributing almost 200 points. We'll run you through the internals, but for the time being, let's run you through the headlines. Markets surge to the highest point of the day. The Nifty scales the 11,150 mark. Most sectoral indices trade with gains. The Nifty IT is the only sectoral laggard in today's trade. 4 out of the top 5 Nifty losers are IT stocks. And on the other hand, oil marketing companies are leading gains on the Nifty. BPCL, HPCL and IOC are seeing gains of over 5% each. And Dilip Buildcon is gaining in trade today after it won a 480 crore EPC order in Maharashtra. Good afternoon, Neeraj. A big bang start to the trading week, carrying forward from last week's 2.5% gains. It's definitely a very encouraging start. Yeah, and the broader markets too are doing extremely well, right? Hotel stocks, infra names, some of the specific group names, all of them doing so well. And in this, but we'll talk about all of those. But first, the moves in the large caps, about 1% higher for the Nifty. Strong day. I'm particularly interested in once. I know the volatility has moved down. There's no surprise there. It would have moved down dramatically because it's already corrected, but IndiaNivesh would be slightly lower in trade today as well. More importantly, I think the volumes today would be very, very interesting. This is IndiaNivesh and lying absolutely flat. It was, yeah, as I said, bobbing between the red and the green, but marginally off today. But the volumes in today's session would be interesting, and let's just see how well we have done on that side. I think it's probably at par. About 5 lakh crores right now would mean that we could nudge about 6.5, 7 maybe in the next 1.5 hours, which is not bad. Cash market 24,000, which means that the high probability going about 30,000. So it's a good day of trade on fairly decent volume and participation, seemingly. Let's pull up the heat map and show you what's moving and what's not. I'll talk about the large caps. David and I'll speak about what's happening in the mid caps. And the market breadth hasn't changed at all. I mean, maybe 2 or 3 more stocks in the red, but that's hardly anything. And the top loser is lower than 1%. IT's taken a bit of a backseat. You would naturally expect on a day like this. But the gainers and some very strong gains out there. Look at the OMCs. Look at almost everything related to PSU. So HP, BP, Power Grid, Coal India, IOC, NTPC, and some of these have news flows to them. Power Grid and NTPC, for example. But very smart moves here. Hardly can find a place which is not putting its best foot forward. Well, strong moves, and let's see if they last. The world markets are okay. Devina, China was doing very well. It's not that all the other world markets have done okay, but certainly no causes for complaint if you're a bull in India. Yeah, and it looks like this trend over the last few days in the broader market space, like they talk about how there is a fear of missing out in the Chinese stocks, which could lead the indices higher. Probably could see that even in our own mid-cap and small-cap spaces. So let's wait and watch as to where this goes. But for today's session, let's take a look at those big movers in trade and some stocks that have moved up. Avanti feeds for the 7th straight day now. You're seeing gains coming into the counter. 35% is what the stock has already clocked in the last 7 days, and today is no exception. The stock has made its move in today's trade too. India Cements, more price hikes on the anvil for southern-based cement makers. You've got 7% on India Cements, and Dilip Buildcon on that 480 crore EPC order is up about 7%. Across the board, there is a move on the NBFCs from various different spaces. So you've got an Edelweiss, which is up. Then you have the small banking financiers, which is up. Equitas, which is up 5.5%. Even Ujjivan is up. And from the housing finance space, the Camfin Homes is up about 6% odd. Volume buzzers, you have a Hemen that's up about closer to double-digit gains coming into the counter with 5.3 lakh shares traded. ITD Cements, the cement is a pocket, is looking strong. And Karnataka Bank also, 37 lakh shares have been traded, and the stock's up about 6.5%. Near 52-week highs, Ipca Laboratories, you have RBL Bank and Credit Access Grameen. That stock actually over the last few days has done really well and has perched itself comfortably at those 52-week highs. But let's talk about the more liquid universe, the futures and options segment. Agam Vakil joins in for that. Agam, good afternoon.
Well, good afternoon. There's no doubt about the fact that there is a lot of buying coming through, given the fact that we've seen so much strength in the broader markets. as well as the benchmark indices. So let's start off with the Nifty futures. As usual, 10.5% increase in OI. A lot of shorts, a lot of longs building in there. The Nifty banking futures also seeing a substantial increase in OI of as much as 7%. Do remember, the banking index is already playing with a high base considering the substantial accumulation that we've seen over the previous few days. Now, the VIX, of course, as one might expect, is largely where it used to be. We haven't seen any change despite the fact that the sharp move that we've seen on the Nifty. Moving on to your open interest, as one might expect, a little more writing around the 11,100 put, and that is where we're going to see a lot more action. Needless to say that the 11,000 put is the one which will be with the maximum open interest, given we are seeing more writing around there as well. Moving on to stocks, well, there I have three actually on my radar, and right at the top I have Cummins India, which is looking at a surge of 22% in open interest, so keep an eye on that one. Followed by Cummins India, we also have Infibeam, where the underlying is also advancing by 12%, another 18% added in open interest. And finally, Jet Airways, where we have seen a decline in open interest of 9%, largely on account of the stock being in the F&O ban. We're going to have to wait and watch whether or not it comes out of the F&O ban given the unwinding, but its underlying also up and about by as much as 2.7%. Not necessarily only because of the broader markets, but also the news flow surrounding it with the 2,000 crore credit facility availed from Punjab National Bank. On the whole, the market's certainly looking very strong at this point in time.
Thanks for that, Agam. Let's now get the guests on the show and start off with the Global Voice. Chris Watling, he's the CEO and Chief Market Strategist at Longview Economics, joins us right now on the show with his thoughts. Chris, good having you. Thanks so much for joining in. The Dow is a separate animal.
To be here. Thank you for having me.
No, pleasure. The Dow is a separate animal today. I guess bogged down by what's happening to Boeing in the pre-markets. Those markets look like starting off slightly weak. But by and large, Asia was very strong. India is looking very strong right now. What's leading to this, if I can call it a risk-on appetite?
Well, I think we've had a few days of sogginess in Western markets, and markets never go in straight lines; they ebb and flow. And I think we've got a bit of the sort of reverse of the last few days. So it's been a tricky week for U.S. markets last week, and Western markets. I think they were pretty soft, and if they bounce for a couple of days, that wouldn't be surprising. I wouldn't read too much into that, if I'm honest.
Okay, Chris. So I think you make a fair point. Last week wasn't the most impressive, and the economic data that come out, particularly the jobs data from the US markets, was slightly wobbly. Do you think that there are palpable reasons for the Western markets to feel a bit jittery? There is the Brexit vote that is coming up in a couple of days from now as well. And as we said, the economic data, the growth number is coming in from almost anybody across OECD or IMF or otherwise, aren't the most promising.
Yeah, I'd be slightly nervous in the near term. I think over the next sort of 4, 6, 8 weeks, the markets could easily give back some of their recent gains. It was a very strong rally, as we know, from the lows in December all the way through into late February, when we sort of hit the local highs on the S&P 500. So, and I'm not convinced that it's going to be one-way traffic upwards here. I think there's some real question marks about global growth. You know, payrolls, you wouldn't put too much emphasis on one data point, but certainly global trade has been a lot worse than people expected. If you look at sort of economic surprises in the States, they've disappointed significantly during this rally in January and February. So, you know, the macro data isn't really following the markets here. And of course, markets are juiced up on the Fed, going patient and wanting to stop its balance sheet contraction. But, you know, I think there's some question marks here. We've come a long way, and we need to pause, consolidate those gains, and actually, I think, give back some upside in the S&P, maybe 5, 6, 7% risk here to the downside over the next few weeks, and then maybe it's an interesting buying opportunity again. But as I say, markets don't go in straight lines. That's the important point.
How closely do you look at emerging markets in India in particular, Chris? There is a couple of factors playing out here, but we're seeing a bit of a pre-election rally in India already.
Yeah, I mean, India's always been an interesting market to me. I mean, emerging markets in general should benefit if this year is a sort of reflation year from the Fed. And I think that's the broader theme here. We've had a mid-late cycle slowdown in the global economy. That's playing out now. Central banks are reacting. And as central banks react, put more liquidity in, the beneficiaries are emerging markets. And I think India is one of those interesting emerging markets within the mix. As you say, you've got an election coming up. The economy is quite isolated from the global economy. It tends to do its own sort of thing. Having said that, it's not the cheapest market amongst the emerging markets. So, yeah, it's an interesting pick. It's one in our emerging markets picks. And as I say, I think emerging markets in general benefit from more Fed liquidity and less Fed tightening, if you like.
Interesting. Okay. So, India may be an isolated case. There is also this Goldman came out with this note talking about how, because of the fear of missing out, there could be some upsides to China. MSCI is anyways going to up its weightage out there. Do you reckon there could be a case of flows which were meant for EMs at large being gobbled up by the Chinese markets? Or if the money is to flow in, there'll be enough for all EMs and not just concentrated around China over the course of the next 6 months, I mean?
Yeah, I mean, over the next 6 months, there'll be enough money for everyone. If we're right, and this is a reflation year in general, absolutely. Emerging markets will benefit from the switch out of probably US equities into emerging markets on a 6-9 month view. So I wouldn't worry about the Chinese situation. Yes, they're increasing the MSCI weighting, and that's happening over a series of quarters. But really, the moves aren't that big in terms of a global context. And I think there's plenty of domestic money that can push the Chinese market higher as well. So it's more of a retail market. It remains that. It's changing slowly, but there's plenty of emerging market, plenty of money out there to flow into emerging markets from developed markets, which are much bigger equity markets in general. So I wouldn't worry about that. There's plenty of cash around, I think.
Okay. Chris, my final question. So are you worried about the prospects? Because you're talking about there being plenty of cash. You're talking about there likely to be a 4-5% uptick in the S&P as well, sooner rather than later. Is there anything that worries you?
Yeah, I mean, lots of things worry me. I worry. There's a lot of risks. There's always lots of risks in bull and bear markets, and lots of things to focus the mind. I'm worried about, as I say, the US macro disappointing relative to expectations over the last few months. I'm worried about the softening there. I'm worried that maybe some bubbles are bursting. There's clearly a bubble in private equity globally, in my opinion, and valuations are extreme. There's a lot of cheap money has gone into that sector, and I'm worried that may be bursting at the moment. It's not clear to me it is, but it's a concern. In fact, we think there are probably 8 key bubbles that one needs to monitor around the world that we're monitoring that could be quite challenging if they do burst. So I suspect we're getting away with it for now, but I'm not sure that'll work as we get into 2021 and 2022. So lots to worry about. Global macro, bursting bubbles from cheap money being withdrawn, and all those sort of trends that we talk about. Not to mention Brexit, although I think Brexit should be largely discounted at this point.
All right, Chris, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts.
Thank you.
A global market opinion coming in there. One counter in focus in today's session is Dilip Buildcon, and not just today. The stock has actually been in focus over the last few days after the stock has surged. But today's session, primarily on the back of the fact that it is the L1 bidder by NHAI for an APC project in Maharashtra. The project costs about 480 crore rupees. Let's discuss in details what the project entails with the head of strategy and planning at Dilip Buildcon. We've got with us Rohan Suryavanshi. Rohan, thanks very much for taking out the time. Could you run us through this particular order?
Hi, Devina. Pleasure to be back on your show. So yes, this project is in the state of Maharashtra, and it's a 480 crore project. It's a four-lane project, and it's about 29 kilometers in length, and it's from Sauned to Gondkhairi. This is next to Nagpur. So this is an area where we are already, doing a lot of work in. And this project has a timeline of about 2 years. It's an EPC project, so it will be completely funded by the government. So with this order, our order book now stands a little less than 24,000 crores, which gives us a fantastic visibility for the next 2.5 years.
Okay. What is the margins on this? I mean, what would the IRRs be?
So the margins that we're expecting on this project is similar to what the company enjoys. It should be in the range of 17% or so. So we are expecting it to be in a similar range as well.
And a similar payment structure by the end of completion?
Yeah. So these are NHAI EPC projects. So you get paid on a monthly basis as you keep on raising bills. So it doesn't require any funding from us. It's just a simple, basic EPC structure.
For quarter 4, this adds on to the order book position. Could you, the expectations are closer to 3,000 and 4,000 orders, crores worth of orders in quarter 4 itself. Is this a reasonable expectation?
I think with the model code of conduct which has come into force, we wouldn't be seeing bidding happening now. But given that there is a very strong pipeline of orders that we already have, and I think that is the same for all EPC companies across the sector, I don't foresee any issue. The thing is, the government has floated about 1,20,000 crores of orders. Now, only a limited portion of that could have been bidded out before this model code of conduct came into being. But once the new government comes, we are expecting orders to really flow well then, because the orders are only given out for bidding once there is already, the land acquisition has already been done for these projects. So we're expecting, given the fact that the government has already invested half the money in the land acquisition process, we're expecting these orders to fructify in June, July kind of timeline.
So what do you hope to end the year with? Your, including your order backlogs, you said are closer to about 24,000 crores.
Yeah, it should be in that range.
No, so this is up till now, right? Because till third quarter ended FY19, you were already at about 23,100 in terms of order backlog. So now you're saying about 20. So we will be,
so we will be executing also. So it will be lower than this, since we are also executing. So fourth quarter execution will also reduce from here. So it will still give us a great 2-year plus visibility.
Okay. Just another aspect, that I wanted to get your views on. There are a lot of brokerage reports suggesting that you're looking to further improve debt on the balance sheet and bring down the net debt to equity to under 1 time. Is that something that you're working towards?
Absolutely. 5 years ago, the debt equity ratio was almost 2.5 times. Right now, it's come to 1.19 or something like that. And by the end of this financial year, it will be almost 1 or a little less than 1. And the next year target is about 0.7 to 0.8 debt equity. So we have already been, every year and every quarter, we've been working towards that. And our working capital cycle has less than halved in the same time in the last 5 years. Also, I guess it would be very important to point out that in the last 5 years, while our revenue has grown almost by 400%, the debt has only grown by about 50-60%. So we've only been using internal accruals to grow and fuel the growth that the company has had. And we've grown, mind you, almost at like a 50% CAGR, YOY.
Sorry, that's how much?
We've grown at a 50% CAGR
50%.
On a year-on-year basis.
Okay. So just going forward, while you're clocking in margins of 17 to 18% currently, is that a reasonable expectation come the coming quarter as well?
Absolutely. I think it would be a very reasonable expectation.
Okay, great. Thank you so much for joining us, Rohan. Appreciate you taking out the time.
Thank you very much for having me.
All right, that's a management Dilip Buildcon. So one more EPC order in the bag. 24,000 odd crores is the order backlog for them. Margins of 17 to 18% is what they're hoping to clock in by quarter 4 as well.
Oh, run this one has had. What a run some of the other infra companies are having. Dilip Buildcon up 6% today, yes, but over the last few days has just had a fabulous move. But just look at what some of the other companies have done too. Today, Sadbhav, for example, has done extremely well. In the last few days, I think Sadbhav Engineering and Infra, or Sadbhav Infrastructure or Sadbhav Engineering has done really well, up about 6% in today's session. But the 1-month charts or the 15-day charts of almost each of these will show a smart uptick that's happened in the last few days. NCC, of course, more stabler of almost all of these, but again, 102. I remember when we did the interaction with them post the results, the stock was at 85. Some big move out there as well. So a clutch of these names, infrastructure companies, are trading remarkably well for themselves in the session today. From one corporate to another, Visaka Industries has commissioned a V-board unit in Haryana, and it has begun commercial production from the same unit. Let's discuss this in detail with Mr. V. Valinath. He's the whole-time director and CFO at Visaka. Mr. Valinath, good having you. Thanks so much for joining in. Can you give us details about this unit? What's the capacity right now? We know the installed annual capacity, if I'm not wrong, is about 50,000 MTS. How is the order book looking like for this plant? When do you expect to touch optimum capacity utilization?
Yeah, see, the stated capacity is 50,000 tons, but it can go up much more with a small amount of expenditure in the future. But keeping the market into account, initially we are not incurring the total capex. That's the reason why we have put it at 50,000 tons. Now, there is a small delay in the implementation of the project. The entire market knows, all the viewers know. So, therefore, and that has happened mostly because the approvals in the Haryana state government took some time. We were taken a little bit by surprise, because our experience in all the other states is that by the time we put up the project and get the machines ready, normally the approvals will fall in place. But here is a case where we completed the project and then the approvals took a little time and therefore we had to delay. But what we have done is we have effectively used this time to ensure that the dealer appointment, sampling, establishing the samples are accepted, establishing proper quality, and also the rate of production. Normally, whenever you commence a new project, there will be some amount of losses and wastages. The process doesn't get set, and the rate of production takes time to pick up. It normally takes about 2 to 3 months to pick up. So here today we are in a state where we are commencing production today, and within 1 month, as I intimated to the stock exchange that we expect to reach 50% capacity utilization, and thereafter within another 2 months we can actually go up to the rated production, subject to the sales matching the production. So subsequent to the 50% capacity utilization, it all depends upon the market, how the market movement of material takes place. But otherwise, on the production side, we will almost be ready in after another 2 months from then to reach 100% capacity utilization.
Okay. No, sorry, I missed that. You will reach 100%, or you will aim to reach 100% what, in a couple of months?
Yeah, first month 50%, and after that, even the market is also ready, therefore the sales also will take place. So after that, technically we will be ready to reach 100% capacity in another 2 months. But only thing is the sales has to match that for us to be able to produce that kind of quantity in such a short time.
But you're saying that the order
book is good enough for the 50% capacity utilization straight away.
Okay, and is there enough in the pipeline for you to move up the capacity utilization in a couple of months?
Sure, that's what. Because it's opening up, we are entering a totally new market, the large market, the north market and the eastern, northeastern market, etc. are open. And those are actually markets which are having a high potential for this product. And therefore, we expect this to scale up faster than the time taken for the existing 2 plants in south and west in the past. But here already, because we have been selling for some quantity earlier from the existing plants, now that will be catered to from the northern plant. Plus, during the last few months, we have appointed a lot of dealers, did a lot of ad campaign and all that. And therefore, we have now a good amount of orders, including exports from there to the Southeast Asian countries.
So what does this plant add in terms of overall revenues? I'm guessing you will get almost like 11 months at least, if not more, of the full benefits of this plant.
Yeah, no, this year, of course, is only March, so it will be over.
Yeah, I'm talking about FY20.
Yeah, FY20 there will be a full year. So FY20 will be a full year. I think we should get about anywhere between 60 to 75 crores addition from this plant itself. 60
to 75 crores addition from this plant.
Yeah.
Okay.
Right.
And how is business by and large looking? Because, I mean, Q3, after many quarters of very good results, your EBITDA and PAT numbers fell in Q3. I mean, there was, the ACS segment, volumes, etc., everything didn't do well. Have you already seen stability in Q4?
Yeah, actually, it is a misnomer to think that our Q3 has been less. Our Q3 has been less when compared to our own Q3 in the last year, which was a quarter which is immediately after the GST. Last year, actually from July 1st, the GST came into force, right? So July to September 1 quarter, then October to December. So last year, July to September and October to December, we did phenomenally well. When compared to that, the performance seems to be a little less. But otherwise, in terms of EBITDA as a whole, I think we are one of the best in the industry. We have done very well. But that apart, in the as-is event sheet, yes, in the third quarter, there is some kind of a slippage because the market itself was very slow. The rural markets were not responding very well during that period. It's also the slackest season for this industry. And therefore, we didn't push too hard to sell the volume. And that's the reason why we slowed down. But right now, I think the market has picked up. And as of now, we are in par with the industry. The market is growing. I think, March now, we are already seeing signals of some markets opening up in the normal fashion that it opens in the peak season. Because from April onwards, going to the peak season, January to March itself will be better. I think this quarter will be much better than the last year's quarter. And even the third quarter.
Okay, so would that enable you to nudge that 11, say maybe a revenue number of 1150 crores for the year at large?
I won't like to commit the numbers, but I think we'll be somewhere close to that.
Okay, and I heard you mention that margins have stayed stable, so that picture would continue.
Yeah, margins are stable, and the good news is that with the Jajjar plant coming up there, now the rupee is softening a bit. So the rupee has gone too wild in the recent past, which has also affected margins across for the entire industry. Now, rupee also has been softening now. I think now it's operating at sub-70 levels. Where it will stabilize, we do not know. Despite the announcement of elections yesterday, the rupee is strong, the markets are strong. So therefore, and I think the upcoming season, people are optimistic about it. So cost will not be a constraint now because except the cement prices, which have risen recently, which we expect to pass on. Other than that, I think the imported fiber, imported wood pulp, especially for the boats unit, will be under check. The exchange rate will be under check. And on top of it, we will also get the benefit of the reduction in freight when we sell in the northern markets. So all these things, I think the margins will, I think margins have bottomed out. I think now there's only upside potential for the margin.
Okay, we'll leave it at that.
Yes.
Mr. Valinath, thank you so much. Congratulations on the plant starting operations and all the best.
Thank you, sir. Thank you very much.
Okay, that's of course Mr. V. Valinath talking about the new plant that is commissioned and very optimistic, 3.5% higher in the session today. Optimistic of about 75 odd crores addition to top line from this plant on a base of about 1100 odd crores for the year at large. Not very big, but not terribly small either. From a quarterly perspective, pretty decent. Nevertheless, that's of course the word on specific corporate, but the market is looking just so strong. And let's hear out one more voice. A closer than expected fight in the Lok Sabha elections has turned investors cautious on Indian equities, is what Adrian Movat believes. He spoke to us earlier about the political overhang on foreign fund flows into India. Listen.
International investors, if you go back 3 or 4 months, were probably a little bit too complacent about the election, with a very strong belief that the current government would get re-elected with a majority. I think their confidence around that has diminished as you've got the state election results coming out and some of the opinion polls. I think it's also important to highlight all the Indian performance in 2018, which was very strong. It was the right market to be overweight in. That has not been the case this year. So the international investor, the global investor, has been repositioning their own emerging market exposure away from India in favor of other emerging markets. But remember, when you look at that portfolio asset allocation, you've also got to look to see if there's net inflows or outflows from emerging market funds. And we are continuing to see some net inflows into emerging market funds. India gets less of that flow, but does still get part of that flow.
The talk around, the trade war tensions, once they start to look like they're going to subside, is that most of the foreign money, which had been sitting on the sidelines with regards to investment into China, is going to move back into China in a big way, which again starts to curtail the prospects of India getting any funds. Is that something that's a likelihood?
Well, remember that the market will speculate on what's going to happen with the trade talks. So the speculation in late 2018 was very negative. The comments, the tweets coming out of the White House were negative. We've had more positive indications, including some comments from Larry Kudlow overnight, which indicates that progress is being made. I think the sell-off and then the recovery around trade fears has pretty much run its course. And for the market to move higher on a trade agreement, we'll need to see that agreement being signed. So I no longer see that as a big driver. To me, the key driver for the Chinese story is going to be the macroeconomic data. The macroeconomic data has been very poor coming out of China. But if you begin to look at what's happening with stimulus, which includes both a monetary stimulus as well as a fiscal stimulus with the tax cuts, it is reasonable to assume that the macro data out of China will be improving as we move into mid-year. And I think that will sustain the rally, because ultimately equities are about profit growth. We had a contraction in private sector profits in 2018. Hopefully we start to see the market speculating on a recovery in that, particularly as they project profit growth through into early 2020.
Adrian Movat there with his views on India, funds, foreign money, and where exactly they could move in once at all there's some sense of semblance around the trade dispute between China and the US. Bringing in Hemen Kapadia of KRChoksey. He's joining us on the show right now. The markets are near the high points of the day. Hemen, we're approaching 11,200 now. It's been a very sturdy market. No signs of weakness throughout the day.
Yes, very good afternoon to you, Devina. You're absolutely right. Very steady, and I guess 11.2 and 11.4 are in the offing. I think we have significant OI at around 11.5, so I think that's which seems to be a plateau for the current series. But yes, with corrections, 11.2, okay, we are almost there, and 11.4 is what I think is very much possible in this series. I think we started very light because of geopolitical issues. I think the Bank Nifty added 55% OI in 3 days of the first days of the new settlement, and it finally started performing. So everything is hunky-dory, market breadth has improved, mid-cap, small caps have started performing. So I guess it's honeymoon time.
Okay.
Would you be a buyer though? Right
Yeah,
now?
that's the question I wanted to ask.
Selectively, yes, because quite a few stocks, some have corrected, some have participated, some haven't. So I have a feeling that because of the market breadth improving, a lot of stocks which are technically still undervalued or undiscovered. So selectively, okay, FMCG is bouncing back, they could do well, Reliance has some more upside, IT is weak. So I mean, there are pockets where one can participate. I think participate significantly, and if you look at the mid cap, it's like a complete universe. I think after 1 year of complete hammering, or 1.5 years, we're seeing respite and how.
Okay, no, but so selective stocks, and we'll get to that. But just wondering, would you initiate a long on the Nifty or the Nifty Bank right now at these levels?
Nifty and Nifty Bank. Bank Nifty, no. Nifty, I'll, yes, but just to play it safe, I'll start by selling the 10,900 puts, Neeraj. And in case there is a 80-100 point correction, then I'll initiate in futures. But I'll start by, because the OI is maxed at 11, I don't think 11 seems to be sacrosanct this settlement, barring maybe one blip in here. So I'd start safe by selling 10-9 puts.
Okay, what about specific stocks?
I think a couple of stocks which are looking interesting, Neeraj. I think one of the stocks which is looking interesting is MCX. We've woken up after quite some time. Stock is looking technically positive. We are in a consolidation phase. This is the 4th trading session. I have a feeling we could take a couple of days more to consolidate. So buy that slightly lower 735, stop loss 725, target 757. But frankly speaking, the 757 is a very modest target, Neeraj. I think we are heading to 780.
780?
Yeah.
Okay.
Because like I said, 4th day, it might dip once to 730 or below. That's why I have been slightly conservative, but I think it looks fantastic, should do well. The other stock which is looking interesting is ITC. But thing is, ITC has moved up one way from 274 to 294. So buy it around 290, stop loss 285, target 300. Yeah. If it dips further, I think ITC would be a more compelling buy, frankly speaking.
All right. Those are some of Hemen's ideas. Let's bring in Sumeet Bagadia as well of Choice Broking joining us on the show. Sumeet, let's start off with your index call right now. We're at 11,166 and going strong. Where do you place a cap to this up move?
Hi, good afternoon. We feel that the index is headed higher. If you remember, in last couple of weeks, we have given a buy view in Nifty and Bank Nifty. Now, still, we feel that there is more upside room left, in which Nifty can move up till 11,250, 11,300 levels. I think one can initiate long positions in Nifty at the current market price too. If there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. Downside, now for a trading perspective, the support is placed at around 11,050 levels, and for a positional trade, the support is placed at around 11,000 levels. And on the higher side, we can see a move till 11,250 and 11,300 levels in Nifty. At the same time, Bank Nifty closing out 28,000 will take index to 28,500 levels. We feel that Bank Nifty is also looking good on charts. Any dip till 27,900 level should be used as buying opportunity. Downside, the support is placed at around 27,700 levels for the upside target of 28,300, and above that we can see levels of around 20,500 also in next 1 week to 10 days time horizon.
Okay. What about your stock ideas, Sumeet?
The stock for the day is Vedanta. The stock is looking good to me. We feel that from here we can see a move till 185 or 200 levels. It's presently quoting at around 177 levels. One can initiate long positions at the current market price. If there's a dip of around 2 to 3 points from present levels, then that should be used as a buying opportunity. And on the higher side, 185, 190 should be the immediate target. Above that, we can see levels of around 200 also. The second stock that looks good to me is Bharti Airtel. After a long time, Bharti Airtel has given a good move, and the stock is sustaining at higher levels. It seems if the stock is able to break 330 on closing basis, then we can see a move till 340 or 350 levels. Those who have taken long positions, they should hold on their long positions with a trailing stop losses to be placed at around 315 on lower side for the upside target of 340 and 350.
Okay, so those are some specific stocks, and I think the action in some of the large cap names has been pretty heartening. Yogesh Mehta of Motilal Oswal joins us right now on the show with his analysis. Yogesh, good afternoon. Thanks so much for joining in. For a bull, the last few afternoons have been very strong, but more importantly, the action in the large cap names, OMCs, some of the telcos today, the metal names, they've had some fabulous moves.
Yeah, Neeraj, good afternoon. Since we have seen a favorable environment for at least when I would say that precisely when NCLT has cleared 42,000 crores worth of SR steel, so that gives some more conviction over you can say in general terms the USD INR would be very much stable, or maybe on a appreciating mode rather than depreciating mode. So INR will have a better advantage, and the crude is very much sustaining around $66 per barrel. So that way, and the whatever negativity is there, because the consumption is very much in line with whatever it is growing at, there is no dip into that. So that gives some kind of a projections on the earnings side that yes, this can have the worst is already priced in, unless until we see that if there is something happens on the global front and then crude price spikes up further. But till then the visibility is such that the downside is very limited, because the earning yield and the margins are very much stable for OMC companies. So that way, on a selective sectoral and individual company specific, there are some selective buying, because we believe that all the macros which are there in place and micros are also turning into favor. So that gives some kind of confidence into select few sectors and the stocks individually, and that's why we see some good action on the actually I will say buying action into the stocks.
Okay. What have you made of the oil marketing companies in particular? I think the PSU pack by and large has gone up, but it's a very diverse pack, so we would want to talk one by one. BP, HP, IOC, the last few days, unabated move continues. Not that crude has moved too much or otherwise. What's the sense here?
For oil marketing company, I would say that unless the growth happens in terms of volume, because still the disruption is a long way to go in India for EVs to come. So I believe that downside risk is limited, but in selective way, BPCL, I would say, and IOC, these are the one, because HPCL has some kind of limitations in terms of expansion now, because the ONGC merger and MRPL as well. So there it will have some kind of limitations, but we believe that BPCL and IOC could be the one can give some trigger because of the largest capacity building in and the market share, the production share of diesel and petrol, those are giving better mix to them. So we believe that these would be the better ideas, and IOC, yes, the dividend yield is much higher and that gives some cushion to the investors. That is the only one which was holding on to the stock price, which was not going so much negative once the announcement has come. So that way oil marketing company can give a cushion, though they have rallied in recent recent lows from 320 odd in BPCL or maybe 270 odd to current price 370, 380.
Okay. The other pocket that's extremely active today is the NBFC pocket, and you know, be it the likes of an Edelweiss, be it the housing finance companies, be it the the small finance banks, all of them up and active in today's session. Yogesh, any specific segment that you would target within the NBFC pocket?
Within the NBFC, housing finance could be the one where we can target for, because it is very much diverse in NBFC sector, be it into SME funding or housing finance companies or the retail loan portfolio like Bajaj Finance and others. We would like to have from the current scenario, it would be something like Bajaj Finance. Yes, of course, though it is expensive, but the growth on the AUM part is, we believe, when we spoke to the management, we still believe that it can grow by at least in the range of 40 to 42% for next 1.5 to 2 years, though the liquidity crunch is now far behind for them. And the numbers are also turning up and it is showing the strength into the management confidence is delivering. That way. Secondly, on the housing finance part, with the linkage of the recent rate, we believe that post RERA, now after RERA also it is 1.5 years now, and the things are getting stable, and the housing finance companies can have some advantage over there, where LIC housing is a one, but those are quoting at 1.5 to 1.6 times price to book. But we believe 15 to 17% growth rate is still is achievable, and downside risk for these businesses are now limited. Particularly, I'm talking about LIC housing finance, not all the housing finance companies. So their selective pockets, I believe, I personally also believe that yes, could be one where investors should look at.
Yogesh, what have you, I saw the Motilal Oswal note on the power norms that have come out. NTPC about 16-17% move until Friday, another 3% move today. Power Grid has moved up to. Have these stocks priced in those benefits that come in out of the revised norms, or do you think it's a good time to buy them?
I would say, Neeraj, with revised norm already, the revision into the norms and the price tariffs, it is not up to this significance, and yet the price have appreciated much more in advance to what it would be have been a benefit. So I believe that now NTPC and Power Grid can be a good one, because there is no cap on their earning. There is a cap on the earning, but the volume, as and when the volume increases, they earn more and more on that part. Capital raising is not an issue. So their fixed margin is already there. So I believe Power Grid could be the one where 12 to 15% growth rate every year, year-on-year CAGR could be achievable. NTPC, what are the norms have been revised? I think when we had done the calculation, it is showing that maybe the impact would be on the positive turn would be not more than 5 to 6 billion, and that is already priced in, and the stock has run up by almost as you're saying 15-17%, or maybe at the higher side 20%, or maybe 15%. So it is already priced in right now. So there is no point in going further into that, because the business, the power generation they are using is more of a thermal rather than any other different technology. So NTPC has already done their fair bit of that.
Okay, interesting. Some gains out there, Hemen, into this entire lot. NTPC, Power Grid, etc., and the rallies have not been like a day rally. It's been a few days of an uptick. Can somebody, or if somebody has a long call here, would you recommend booking profits, NTPC or Power Grid?
I was just looking at Power Grid. I think we're at 195.90 cash market NSE, Neeraj. Closer to 199 or 200. It's not very far away, 3 or 4 rupees away. But I have a feeling that's where one can book partial profits. It's not a triple top, but it's a top of a congestion area and the last swing high. So I think that's where one can book out, time being as far as Power Grid is concerned. NTPC has run into a virtual roadblock at 160 intraday high of today, and we are at 157. So 5 weeks in a row and closer to resistance levels. I mean, if it goes past 160, I think one can book some profit in NTPC also. Power Grid, I'd wait just a little bit more.
Okay. Just one final question before we let you go, Yogesh. In the last few days, what's been the top call from your end personally to your clients? Large cap, mid cap, small cap? I'm market cap agnostic right now.
It was across mid cap, of course, Neeraj, and since we have seen the valuation gap between the large cap and mid caps have been shrinking day by day, and we are monitoring for last 2 to 3 quarters, and it has come to now historical low. Plus additionally, the large cap have done their fair bit in last 6 months of a rally, and now they are no more, there is no more further room left or the headroom left for them in terms of valuation and the performance they are delivering on the company's projections. So that way we have entered into the mid caps, though large caps will not have any bad days, because we cannot see that, you know, large cap will correct by 30-40% or maybe 20%. It will be very extreme scenario. So that way on the large cap, yes, we are still there, and mid caps we have projected, we have more positions into mid caps.
Okay, we leave it at that. Yogesh, thanks so much for taking the time out and being with us.
Pleasure.
Well, a lot of stocks are moving around. InfoEdge is no different. Set for growth across the board. Naukri's job survey indicates that Indian IT industry went on a hiring spree in February. Property listing portal 99 Acres may get a boost from the recent GST relief for real estate, and Zomato is succeeding in its efforts. Brokerages are turning extremely bullish on the company. I think HSBC today came out with a very large upgrade on the target prices as well for InfoEdge. Let's talk about, in a very quick fashion, how is business shaping up? The CFO, Chintan Thakkar, joins us right now on the conversation. Chintan, good having you. Thanks much for joining in. Amongst the reasons cited by brokerages which are bullish, and
thank you.
You know, there was this note that came in today from HSBC as well, which was speaking about this. 2 or 3 things. One, whatever is happening with some of your investments, including investments in Zomato, etc., and how, while the job market is looking slightly wobbly, for the organized players, it is still looking very, very strong and the traction is solid. Can you give us some details about how the quarter is shaping up thus far?
Yeah, as you rightly said, that if you look at the past indicators, you know, particularly last 3 quarters, we have seen a good growth in the formal job market, and that kind of, you know, is on the back of the IT and IT-enabled services, and that's helping our portal as well. You know, so you know, we would think that that kind of trend can continue. So we are hoping for the best, you know, from the job market, you know, the Naukri.com perspective. Similarly, as you pointed out, you know, real estate also past, you know, this is now last 5 quarters we have seen a good growth, particularly in the, you know, resale rental market, and also in the new market where probably the inventory levels are going down, and that has also worked well for us, you know. So we have been growing rapidly in that space, you know, as well. And I think this quarter also kind of, you know, hopefully should do better. Of course, I must also say that, you know, most of the sales happens at the last few days of the quarter, so this is kind of little early, you know, in that sense. But so far so good, you know.
Just with regards to the overall listings, are you seeing a considerable increment there?
Yeah, I think in both listings for the job as well as for the listing overall in the real estate, we are seeing increase in traffic in both, you know, the portals, and that's definitely one of the operating metrics that we track. And usually we see that when that kind of, you know, tracking is kind of, you know, is doing better, the billing, you know, also kind of with a leg follow on that, you know.
So how much of an uptick has the listing seen on both these portals?
Yeah, so I would not be able to get into very specific about how exactly the listing has moved, but I think constantly, and I'm saying that this is last, you know, 3 or 4 quarters that we have been seeing that it's been going up, you know. particularly on the real estate side, we have been seeing a lot more listing coming from the broker side, because as I said, that resale and rental market seems to be doing, quite, reasonably well, in past few quarters, and we would hope that kind of trend continues for this quarter as well. And as you just mentioned about the GST and some of the other concessions that are coming, for the real estate industry, the outlook, is kind of, in generally positive.
Let's talk about some fundraising activity, particularly for Zomato, in terms of how much you plan to raise overall versus what has already come in, and what that money is going to be utilized primarily for.
Look, Zomato has been kind of growing very rapidly, and they have been consuming a lot of growth capital, and they will continue to do so. At any given point in time, they are always they have a lot of inbound inquiries of the investments, and they would kind of look at that. It's a separate company. We are not into the operating part of that company, so I would not be able to give details about what exactly is the total round. But if you are really tracking it, just few days back we already announced that there is a kind of a fundraise of another more than 100 million that is very recently last week we announced it that we have closed it. And also there is a kind of sale of their Middle East UAE business has also happened with Delivery Hero, and that is also going to bring roughly about $170 million into the coffers of the company. So I think right now they are pretty liquid, and they've got a lot of cash available with them. Having said that, given that the way the market is expanding, I'm pretty sure that they would continue to require growth capital for themselves.
On all these three verticals, what is the strategy to maintain competitiveness and market share going forward?
Well, if you are talking about the internal operating businesses that we have, we are already kind of the four verticals that we are into: recruitment, real estate search portal, matrimony, matchmaking, and also the education classified. We are actually, other than the matrimony business, we are already kind of number one in all the other verticals, and in fact in recruitment we are somewhat having a significant market share. So in that sense, in the niche that we operate, we are kind of dominant over there. So we are already there, and we have been investing a lot on the technical sides of our business. So our investments are mostly going in the in hiring and upgrading the talent on the technology side, and we'll continue to do so. And we will think that we believe that in the years to come, that investment would give a good ROI for our stakeholders. So we would really want to take our platform to a next level and continue to lead in that market. Similarly, we have been investing in the brand as well as on the technology on real estate side, and we think that the way the business has been shaping up in past few quarters, we are hopeful that we would take that business also to a next level.
All right, Mr. Thakkar, we leave it at that. Thank you so very much for joining us this afternoon. The CFO at the company, Mr. Chintan Thakkar, talking about the business outlook for InfoEdge. InfoEdge itself has been moving up now at about 1798, very close to 1800. A quick chart check came in on InfoEdge.
Short term, medium term, long term, Devina, whatever time frame I have, the stock is very clearly in an established uptrend. So currently we've been moving sideways for around 7-8 weeks or so, and we are on the cusp of an upward breakout from here. The breakout level is 1840, but looks good. We are in a matured uptrend, and it continues to do so. Even the long-term charts seem to indicate technical stability, Devina. I guess we are heading towards 1940 and 2010 over the next few months.
You look at the gains that have come in into the cement pack, for example. Orient Cement is up 11%. India Cement's up 7.5 at 103. I'm guessing some of the other smaller ones too would have done well. If not an Ultratech, at least the smaller cement names are all doing really well for themselves. Sumeet, Bagadia, which is the best chart in the cement space?
See, most of the cement stocks are looking good to me. At present, Ultratech is looking good. It has given a one-way move from the levels of 3400 levels. After every rise, it gives some correction. It consolidates. The stock consolidates for 1 or 2 days, and then again it starts its up move. Now, after a correction of 2 days, the stock is trading higher. It has broken the highs of 4020, which was made on 6th March. Now it seems that from present levels, the stock is headed till 4250 or 4300 levels. Those who have taken long positions in UltraTech Cement, they can hold on the existing long positions, and even one can go ahead and initiate a fresh long positions at the current market price with the stop loss to be placed at 39.20, 39.30 on lower side for the upside target of 42.50 and 40 or 300 levels. Cement stocks like India Cement, ACC and Ambuja are also looking good to me.
Yeah. The other allied pocket is the infrastructure stocks. Hemen, all of these have been doing very well. What looks attractive on the charts even now?
A few stocks we spoke about, Neeraj, NCC, ITD, cementation, and one another stock. I think I thought NCC, but frankly speaking, ITD is looking quite good. We posted a higher top, higher bottom on the monthly chart, Neeraj. Positives, technically positive divergences, crossover buys. We have also this week on the verge of overcoming the 55-week exponential moving average. We're at 133, we are going to 145 and more. So frankly speaking, on any dip, if any, I'm saying dip because ITD has gone up for 4 weeks in a row. There is a bullish gap which has happened today. It's not a thumb rule, but normally the stock tries to cover up the gap, which is at 124. So I'm not sure whether it gets covered or not, but if it does, I think it would be a very, very strong compulsive buy. Current levels, good, but on a decline, great.
Wow, okay, it's a big move. They've got an order today, but about 15% in the last 2 sessions, 8.5% today, and the volumes are a giveaway, right? Over 1 million shares traded in ITD cementation. You don't normally see such volumes on this stock, so good going really. That's the average volume compared to the, today's volume compared to the 20-day average volume, and really remarkable going.
Bharti Airtel
I was about to say
7.5% right now, and 10.3 million shares traded on the stock. It's at 332, and since morning, there's just been one way that the stock has been moving. It's up at the highest point of the day, but this is a really big move for many of the index stocks. So, an Eicher Motors, for example, is already approaching 23,000. 1,000 points in a single day, 4.5%. Your HPPP, ISC both are up 5%. Bharti Airtel's up 7.5%, and that's gaining swift ground. Power Grid and all these stocks which have been dormant up until now have suddenly been, shaken up, and the kind of moves that these stocks have seen is phenomenal, at least in today's session. Hero Motorcorp's up 2.8%, Asian Paints up 2.7%. We'll try and get Hemen and Sumeet to give some, trades, whether or not possible, on some of these names. But we'll have to slip into a short break right here. In the meantime, let's listen into an excerpt of a chat we had with the Power Secretary, Mr. Ajay Kumar Bhalla, on the government's latest measures to revive stressed assets in the power space.
Consistent efforts are being made to ensure that some of these stressed assets get revived, especially the commissioned ones. And about 11,000 megawatts assets we have already revived through Shakti policy and other measures. These were another short to medium term effort that till the regular PPAs are available, we should provide coal to these plants to sell power even in the short term, provided power is sold in a transparent manner in the exchange or in our portal. So these are the efforts which high level committee recommended, group of ministers considered, and finally cabinet approved it. I expect that this is definitely going to help some of these assets to have a short term revival. And then in the meanwhile, growth is taking place above 5%. So they should get regular revival also in due course. This is a major step because coal linkages till now was being provided only for the medium and long term. So in the shorter term, there was no coal availability in the country other than participating in the auction. So this recommendation also increases the quantity for e-auction coal, as well as provision for selling power in the short term. And I'm sure you are aware of that we have brought out another bid for 2,500 megawatt on aggregation basis, basically for the stressed plants, which have coal linkages but do not have PPAs.
All right. Is this a recommendation where NTPC would likely be the aggregator?
Yeah, that will, the Power Finance Corporation is the aggregator, and one of the agencies will be aggregating on their behalf. This bid is already out. So we expect, I mean, earlier also we had done this, and 1900 megawatt, and all those people, generators who participated were the stressed plants. And this also I expect in 2500 once the bids are invited. We expect most of the power plants which are stressed, the commissioned capacities which are stressed, will participate in this.
Right. So just one last question, one question on this count, where we are talking about providing coal linkages via Coal India to some of these stressed power assets. Is that likely to put additional pressure on Coal India, to the coal supply that it's witnessing? And do you think that it's going to be able to take on this additional burden to supply to these kind of stressed assets?
Coal India has their action plan to increase production, and they have been opening new mines or increasing production of the existing mines. At times there were logistical constraints and all, which also we regularly discuss with the railways, and in some cases even lifting to shorter distances by road has been allowed. So the comprehensive efforts are being made. I expect that Coal India will definitely stand up to this requirement, and whatever additionality is required, they should be able to make available. They have certain surplus production in some mines where rail connectivity issues are there, and it is being worked out. The road strengthening has taken place, so loading has improved. I mean, if you look at the yearly dispatches of coal for thermal sector, there is remarkable improvement as far as coal dispatches are concerned.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still with Countdown. 26 minutes left to go for market closing. It's an extremely strong performance and a strong show put up by the benchmark indices. The broader market performance should pull up the mid caps and the small caps as well to see whether or not the day where the Nifty is up about 1.2% coincides with an uptick in the mid cap and the small cap space as well. So yes, doing much better and stronger hands at play in today's session. No sign of weakness or a giveaway even in intraday trade. It's just a clear glide up for both the mid cap as well as the small cap index. Taking a look at what the rest of the globe is doing, Europe particularly, and then we take a look at the turnover numbers. Europe is up marginally though. CAC is up just a smidge. FTSE though was up 0.75%. Our futures should come up on your screen as well. That's trading in the red though, 1% lower. right now for the Dow futures. Turnover then. At the start of the show when we took a check, it was somewhere around 23,000 on the cash market side. NSE cash now stands at 29,400. On the F&O side, we've already crossed 6 lakhs on the upside, 6 lakhs crores on the upside. So a strong day with strong volumes, strong trading activity. Wait and watch how the next 25 minutes shape up. But for the time being, let's find out what has made it to Sumeet Sarkar's list of the Fab 4 stocks of the day. Sumeet, good afternoon.
Good afternoon, Devina. So if you see, the first stock on the Fab 4 list is Orient Cement, because that is the top gainer among the cement companies. And for that matter, it's not only Orient Cement, but all the South-based cement companies that have gained after Morgan Stanley channel check suggested that the price have been hiked in South India by nearly 2%. Now remember, this would be the second price hike in South India in the last 2 months. Second on the list is Tata Steel, and for that matter, JSW Steel is also up today, and this after Steel Mint reported that the steel prices in India have been hiked. Third on the list is United Spirits. Now that counter has been gaining after Motilal Oswal upgraded the counter to a buy rating and have hiked the target price to 700 rupees. Now the brokerage is saying that the stock is trading at a discount despite a good earnings growth trajectory that is expected from the stock going forward. Last on the list is Jet Airways. Now that stock has gained after Mint reported that the company has received fresh loan in excess of around 2,000 crore rupees from Punjab National Bank. The company is set to use this money for its working capital requirement, and that stock has been gaining nearly 3% on the back of this news.
All right. Sumeet, thank you so much for joining in. That's the Fab 4 stocks of the day. Dharmesh Kant of IndiaNivesh Securities is also joining us on the show right now. Dharmesh, a big bang move over the last few days. Do you think it's a bit too late for investors to, look at making fresh investments? Because I'm sure there is that sense of missing out that's creeping into most investors, at least in the mid-cap and the small-cap space, the way they've run up.
Yeah, good afternoon. No, I don't think so, because if you look at the valuations, many of the mid-cap and small-cap stocks, those who are quality names and have come out with still a set of numbers, still there is a big gap out there. So even after the run-up which we have seen in the last 6-7 trading session, I think there is a plenty of scope for them to go on an upside. And I would stick to more of our domestic cyclical and consumption themes rather than global plays like for example IT, pharma or metals. I would stay away from them. Barring them, most of the spaces look pretty attractive to me, and I think BFSI segment and cement on the material side, and then auto ancillary, these are the pockets where most of the action will be there. And most of the public sector undertakings like BEL and BCC and all, they would continue to find a good amount of traction going forward. So I do think there's still 20 to 30% kind of an upside left in mid and small cap stocks. The companies which have reported good set of numbers, and there's a clear visibility of the growth going forward.
What's up with Bharti Airtel, Dharmesh?
Nothing to my knowledge. It's just that some bounce back is there, and maybe some things to do with debt pairing by raising equity capital. So that will bring down the cost significantly when it happens, and the issue size is supposed to be large. So I have my own doubts and questions in place whether any new investor would be investing into a company like Bharti Airtel, because the entire space is going to go through a stiff competition which is already there, and it is not going to subside or abide very soon. It will continue to be the way it is. So even if you just on operational count you may increase your profitability, but actual growth in profitability I doubt is going to come. So still trading at very high valuation multiples, assuming the current market price in the earnings they have been reporting. So it's just one day kind of a take or 2 day kind of a uptake, nothing more to that.
Okay, that wouldn't be the case for some of the PSUs. Right now we've spoken about a few PSUs, which is the oil marketing companies and the power companies, Power Grid and NTPC. What about the others? There is some uptick today that we're seeing in Coal India. We've seen upticks in some of the PSU banks as well. Any particular PSU name that you're bullish on right now? And leave out State Bank of India, that's separate. Anything else in the PSU pack?
Yeah, I think Coal India looks pretty attractive even at 244, 245 kind of a level, because it's trading at 6 times PE multiple based on FY21 earnings estimate which we have. And though if you look at last 2-3 months kind of a volume of take, it has been on a rising trend. And going forward, the way power sector issues are getting resolved, I think this volume of take will continue to be on an uptrend of around 8 to 9%, if not 10%. And then the pricing power will also be there. So net considering around 10% kind of a dividend yield at the current market price which Coal India offers, it's a very good value buy. So at every fall we have been, reiterating to our clients to invest into Coal India. And though initially we started around 260 kind of a price point, so it went down to 212, where again we recommended them. So fundamentally, I don't think anything is wrong with Coal India. Operationally, they have been improving. Volume is on the rise. And the valuations are pretty cheap. So even if you buy here and consider dividend yield that they give, there is very few chance that you will lose on capital. At best, you may not be able to make good money. But our price target for Coal India is 340, based on 9x FY21 earnings multiples. So a distance to go. It's a good value buy.
LIC Housing Finance now crosses 500. It's at 502 right now. Last 7 days has given you about 7%, and equally handsome returns for the month as well. Sumeet Bagadia, LIC Housing Finance, would there be a trading opportunity here?
It's a buy. It has given a move over 500 levels. A closing over 500 will take stock prices to 525, 530 levels. I think after a long time, the stock has given a breakout. If it sustains and give good move in next 1 or 2 days, then the stock is headed higher for the targets of 525, 530. That would be the immediate target. There is a possibility that we might see a move till 570 also in next couple of weeks. So it's better to be on buy side. If there is a correction till 490 levels, then that should be used as a buying opportunity in LIC Housing Finance.
Okay. What else? We spoke about how some of the cement names have done well. The other really strong pack, Hemen Kapadia, have been some of these textile companies. So Indo count is up 10% today. The last few days has done well. Arvind has had some specific reasons, but leave that out. Welspun India, I'm clubbing that as in that pack. Himmat Singha Seed up about 9%. All of these have steadily moved up 3-4 days in a row. Is there more upside in any of these names?
Well, Neeraj, if you take a slightly longer term point of view, I think yes. We also spoke about Welspun India.
Yeah.
I, at the risk of sounding overly bullish, we're at 62. The stock is going to move up 2.5 times in the next 3 years. I have no doubts on that.
Long-term charts.
Yeah, I wouldn't normally stick my neck out on certain things, but I see certain Elliott wave patterns which normally work out very well for me. So this looks brilliant, and most of the other stocks that you mentioned, I think some of them are have posted medium-term bottoms, and some of them are also possibly indicating longer-term turnaround. Okay, a little bit of anticipation, but I think a lot of technical positives. Now, sometimes they're a flash in the pan. There's no follow-up, but this time around, it possibly looks like the real thing. So few stocks that you mentioned, in various degrees, I think they're all looking very promising.
The other one being Ashoka Buildcon. The stock's at 137. Today is up about 2.5%, but the last 7 days is up 16%. A good showing on the monthly performance as well, 22% higher. Sumeet, and Ashoka Buildcon at 137.
See, the stock, it seems that from here on, our stock can give a good move. If a resistance of 140 is taken away, then we can see a move till 160 levels. I think those who have taken long positions in this stock, they can hold on the existing long positions with the trailing stop losses to be placed at 130, 131 levels. That is 200 DMA levels also. So it has good support at around 130, 131 levels. Even one can go ahead and initiate fresh long positions. On high side, 141 is the immediate resistance. Once the stock is able to break the levels, then we can see a move till 154 or even till 160 levels in next couple of weeks. So it's better to be on buy side in this stock.
Okay. Let's get a sense of what dealing rooms are recommending in the session today on a scenario like this. Darshan Mehta and Yatin Mota are here. with their channel checks. Both of you, good afternoon. Darshan, let's start with you first.
Yeah, so Neeraj, mid-caps is something that dealers are clearly indicating that there is heavy buying. One of the stocks which has managed to move is Orient Paper. There's a buzz of a potential corporate announcement that could come in, and that is something that is keeping the counter higher. Decent volumes, 1.9 million shares already traded on the counter. Avanti Feeds also, after a few weeks trading session, Avanti Feeds has managed to bounce back up almost 9% in today's trade. Dealers indicate that some of the HNIs are actively accumulating the counter. And the last one is RBL Bank, which is trading at a fresh 52-week high. Again, dealers believe that the momentum probably will continue on RBL Bank, and they are indicating that there are heavy buy flows on the counter. But Yatin, what are you hearing?
Tech Mahindra, and in general, the IT stocks are in pressure today, especially the large cap ones, 0.5% down for Tech Mahindra. And dealers are indicating at this point in time that the selling is expected to continue in few of these, large cap IT stocks, and probably that is the reason why we are looking at some short build-up also, which is happening in trade today. Apart from Tech Mahindra, IDFC Limited is looking strong, 5.5% up for that one. Dealers are recommending a buy on this one based on F&O trends. So, this is something that they are trading in the future and option segment. And finally, granules in the mid-cap space is something wherein the HNI accumulation continues. Last week also we saw a couple of block deals which happened in which a lot of HNIs participated. And today also dealers are indicating that HNI interest is quite high as far as this mid-cap name is concerned.
Right, yeah, then thanks very much for that. Those are some stocks you need to keep an eye out for. And Dharmesh, I want to come to you with Avanti Feeds. And the stock is up 35% in the last 7 days. What do you think has caused this kind of excitement around the stock?
No idea, seriously, no idea why 35% in the last few days this stock has gone up. And we don't cover it actively, but the space is attractive. The space in which Avanti Feed operates is pretty attractive. Very few competition out there. Waterbase is other company which is there in the same space, but since we don't cover it, I won't be able to comment on it.
Sure, all right. Nonetheless, a very strong performance by Avanti Feeds. Would you trade it, Hemen? At 450. It's run up 35%.
No, I would wait, and if it comes down to 405, 410, that's when I'd keep a 30 rupee stop loss and a 100 rupee target. But currently, I'm not sure the risk reward ratio is in favor. It can go up, but it's susceptible to a correction. So I'd wait for it to come. If it doesn't come, no.
To what levels would you wait?
I'd be a buyer at around 405, 410, Devina, with a 30 rupee stop loss and a 100 rupee target.
Okay, so still hoping for a correction on that one. Only if it comes down to levels of 405 is when you take a long position on this one with a target of 100 rupees on the upside. Anything else that you've noticed, Sumeet Bagadia, in the last half an hour of trade that looks interesting to you?
So today, Coal India has given a very good move. If you look at the chart, it seems that from last couple of days, Coal India has given a positive move. And if the stock is able to break the resistance on higher side of 246, then we can see the stock has potential to touch levels of around 260, 270 this time. I think those who have taken long positions in Coal India, they should hold on the existing long positions. And even, in fact, one can go initiate fresh long positions at the current market price, with a stop loss to be placed at 235 levels on lower side. And on high side, we can expect targets of around 260 and then 270 levels.
Okay, let's start. Before we start wrapping up the markets in about 8 minutes, a good time to get in some closing strategies. I know we are a couple of minutes earlier, but the markets are very active. So let's, and the Nifty, by the way, is trading in the highest point of the day right now. So let maybe give our viewers more time to try and buy into some of these names. Hemen, if I can come to you first with your top closing strategy today.
Kotak, Glenmark, Pidilite, Ajanta, Reliance.
F5.
Yeah, frankly speaking, it's like a a la carte, you pick whatever. But frankly speaking, yeah, buffet. Sorry, I think Kotak or Britannia both look good for a BTST. Neeraj.
Kotak or Britannia both look good for a BTST.
All that I told you, but yeah.
Okay. Bharti is not looking good. It's 9%.
Bharti is looking good, but the Devina thing is, we're at a resistance level. Bharti, you're absolutely right. We've seen OI build up, but we've not closed about 340 Devina since 20th September. So I think there might be a small blip, but if it takes that out, I think it's a possibility. I think we're going to move another 5-7%, but I'm slightly reticent because we may or may not stop at 340. The momentum seems to suggest we might just knock it off.
Okay, still waiting to scale that mark of 340 for Bharti, but the stock's up and about in a big way today. 9% already. 14.26 million shares have been traded so far on the counter. Sumeet, Bagadia, your closing ideas?
JSW Steel looks good to me. JSW Steel can move up till 300 or even till 310 levels. One can initiate long positions in JSW Steel at the current market price, with a small stop loss to be placed at around 286 levels on lower side for the upside target of 300 and then 310 levels.
Okay. Interesting. Some of the auto names too have bounced back. Dharmesh, Kant, the likes of Ashok Leyland and the others, are these essentially just bounce back moves because the market itself is doing well, or would you read more into it?
No, Neeraj, these are just bounce back moves which we are seeing in the auto names, and our team recently did a channel check in the Eastern UP region and they have just come back. So the analysis is really very scary because most of the dealers are just dumping the stocks. Even the showrooms have become like a go down, and outside trucks are there where bikes and two-wheelers are just being loaded. They are unable to unload it. So sales are not happening on the retail level. And the scary part is maybe month of March will go through, but in the month of April, May, you will definitely see a production cut coming because of the inventory has to be utilized. So, and MSCB is already on the other end of the cycle. So 3 good years have gone, and we have seen that in the monthly numbers being reported by be it Ashok Leyland or M&M or Tata Motors, all have reported there is a clear deceleration in the growth trajectory which they were having. So I think this is just a bounce back. One should use this bounce back to exit the stocks, be it auto or auto ancillary. But yeah, the way the momentum is going, you may get 5-7% upside from here. Only Bajaj Auto is the company which were doing fairly well even on the retail sales side basis. Other than that, most of the companies are in real trouble. That is what our channel check suggests, and we have been advising our clients to use this bounce back as an opportunity to exit these counters.
As a house, what is the upside that you're giving the current momentum to the index, Dharmesh?
See, index, I doubt, I mean around 300 points more Nifty, and that is primarily because the way currency has reacted. So if INR comes to 68, 67, 50 kind of a levels, which is a likely scenario since the election dates and everything has been announced, and now the positioning will be built up on, for short-term trading basis by FIs and everybody, all HNIs and big pocket clients, they would be doing that. So to my mind, I do think that we will see a sharp, correction in INR. I mean correction when I say it's like a precision going down 67, 50, 68 kind of levels, and that will give a flip to the index of around 200 or 300 points from where Nifty. But the action will be in mid and small cap where you will see a good traction happening, and I am not ruling out around 15 to 20% kind of an upside from here because still people are skeptical. So they are still doubting this upside. As long as this doubt persists, I have never seen the market correcting. So my own sense is we will see this momentum going forward, even if the index consolidates. So 11,300 to 400 is where I see this market picking out.
Interestingly, we're back to those, since we talked on the topic of the currency, we're back to those August levels, August 2018 levels, from where the currency actually started to depreciate in a big way and move past that 74 to the dollar mark as well. So sometime around end of August is where we actually started to see that big move up coming in, and we're back to those levels right now, despite whatever has been happening globally. Even with crude oil prices, that has somewhat stabilized right now. So currency impact, not to that great an extent right now, under 70 to the dollar. 69.92 is where the USD INR is currently trading at. What does it do for some of these IT companies? I mean, up until now, these were some of the favorite names to invest in, and today's session, maximum losers are all from the IT space. Dharmesh.
Take your profits off the table. I don't see much traction in IT stocks, at least for next couple of months, because numbers were, okay types when they reported the Q3 numbers, and Q4 won't be any different. Though the commentary did, change. It came more on the positive side, but Valuation wise, they still look expensive to me, and I think from here we can see a further 5 to 7% kind of a slide in IT stocks on individual stocks, be it Infosys, TCS, SCL Tech, Tech Mahindra. They have corrected a bit, but still 5 to 7% more to go. And thereafter, Q4 numbers are announced and how the commentary goes by how the global scenario is, because most of the, macroeconomic indicators are indicating a slowdown in the global economy, be it Europe, US. If that happens, these IT companies will lose on business. So I have my own doubts on these companies, and we are not recommending them as a value buy or, portfolio pick to our clients.
Okay. Dharmesh, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time today.
Thank you so much.
11173 for the Nifty, the Sensex 37,072. It's rock solid, and we're ending very well. Keep in mind the US markets are not doing all that well, bogged down by what Boeing is doing, of course. One of the higher weightages on the Dow, and those futures are showing a downtick of about 182 points, case specific, but the last few days haven't been that impressive for the US markets. Europe should come up on your screen because Asia had a pretty reasonable day, and Europe too is doing reasonably okay for itself. It's not down. So Dow has specific reasons why it is doing what it is doing. But we have about 2 minutes left, so it's a good time to get in some specific stocks and views out there. We've spoken about almost all the high-flying movers in the session today. What we haven't spoken about are stocks that have corrected a little bit. Hemen, quick thoughts on Nifty IT?
It's slightly corrected, Neeraj. I think it's very apparent. But okay, we're at 15,390. 15,300 is support, and we also are taking support on the 55-day exponential moving average today from an intraday point of view, Neeraj. So yes, we are corrective. I think we could take some more time. I'm not sure if it's going to take too much of price. Only and only if we close below 15,300, could we come to 15,140? But I don't think it's a big deal. It seems more like a hiccup within an uptrend. So it seems corrective, nothing more. But yeah, but the correction is not yet over.
Okay, and by the way, NTPC is now succumbed to some selling pressure. So some profit booking in that stock for sure. It's trading at the lowest point of the day, down about, yes, 1.5% in trade. One space that I haven't spoken about, Sumeet Bagadia, very quickly, the hotel company, Chalet Hotels, Lemon Tree and a couple of others. And Lemon Tree had a big block too, by the way, today. So volumes would be high. How does this space look?
Well, recently we have seen some traction in most of the hotel stocks. You have spoken about Lemon Tree. That looks good to me. It has given a good move from lower levels. The only concern is that there is some liquidity problem, and there is sudden swings in the counter from lower levels as well as from higher levels. But nevertheless, the stock is looking good on charts, and above 90 we can see a move till 100 also. Those who have taken long positions, they can hold on the existing long positions.
Okay, stay on, Jaman. We'll get in closing thoughts from you, but here's how we are wrapping up the markets very, very strongly. 140 points for the Nifty. Need I say more? The Nifty Bank is actually not performing as well, so not closing above the 28,000 mark, something that a lot of people was saying that we need to do for the Nifty Bank. Let's wait and watch what happens thereof. The Sensex about 1.13%. The mid cap and the small cap indices will come up on your screen. Very strong show. The market breadth would be positive today. Devina will speak about that. Let me talk about the large caps though. And PSUs dominate that space. Though Bharti Airtel is the top gainer, yes, but PSUs otherwise dominate that space. Bharti up about 8.5%, but BP, HP, Power Grid, Coal India, IOC, it's been a strong show. And then the biggest contributor on the index today, Reliance Industries, up 3.5%. I don't remember the last time in the last 2-3 weeks that I've seen Reliance Industries putting up such a strong show. What's not done well, NTPC corrects a little bit. Otherwise, had a reasonably good day. But otherwise, not too many stocks that are really corrective in the nature today. Very strong footing by the large caps. But hey, the mid cap indices have had an even better day today.
2 to 2.5% for the indices thereabouts, and any particular pocket that you look at has seen gains. So there's hardly any losses in today's session, and that is clearly evident from the market breadth as well. But I'll just highlight some of the bigger movers in trade today within the broader markets. So the cement pocket, and a lot of these cement names are buzzing about. You have an Orient Cement, which has done really well in today's session. Following that, you've got an India Cements, ITD Cementation, all of these names looking extremely sound in today's session. Heavy gains of anywhere between 8 to 10% odd. Jubilant Life is the other one that's looking strong in today's session. Count, Godfrey Phillips. I will talk about Avanti fees. The stock, though, in today's session has piled on about 10% odd, 8.5 to 10% odd gains. But the stock in the last 7 days now, inclusive of today's gains, is up about 37%, which is a really strong gain coming in. And like we heard in our dealers room segment, there are a lot of HNIs which are looking interested in the counter. From the paint space, Kansai Nerolac is doing well. Dilip Buildcon had stalled its uptrend in the last few days of profit taking, but today's EPC order win once again has put that rally back on track. Stocks up about 6.5%. Parag Milk Foods, Edelweiss is up about 6%. Bharat Forge and Karnataka Bank are some of the other bigger gainers in trade today. That's what the breadth of the market looks like for you. We're not going to highlight the losers because, while there are a few of them, even the quantum of losses are not all that high for some of the movers within the broader market space. I want to just quickly come back and talk a little bit more about how the day has shut for today, and then look at the breadth, look at the turnover. So that's what you've got in terms of the market move. The Nifty is closing at the high point of the day. You've got the Sensex up about 1% odd, and the Bank Nifty doing relatively well and contributing a good 200 odd points. So we would have liked to see it cross the 28,000 mark, but it didn't in today's session. This is a market breadth extremely strong, not a hint of weakness and not a struggle between bulls and bears, just a clear straight line across the board right from the word go till the time we've ended the session in today's trade. Turnover comes up next on your screen. And taking a look at how strong it's been, 35,000, almost 35,000 crores in the cash market numbers. So this is a strong performance on the back of strong pricing action. You've got the F&O at about 7 odd lakh crores, which is high for the start of the week, considering it's not even a weekly expiry day, but that's an encouraging number nonetheless. We'll wait and watch to see what the FII data and the DII data suggest come tomorrow, and whether or not there was indeed any meaningful buying that took place. Taking a look at the intraday, the individual contributors, and don't want to focus on the losses because it's just one pocket, and that to a point or two from the IT pack. But Reliance Industries not right at the top of the heap in terms of the percentage gains, because that spot has been taken by Bharti Airtel with 9% move, but the stock was up 3.5%, and a heavy-weighted stock which holds 10% of the index contributed about 30 odd points. ICICI Bank, Bharti Airtel and SBI, the other bigger movers in intraday trade. Getting some final closing comments from our technical experts, Hemen as well as Sumeet. I'll start off with you, Sumeet, first. Your closing comments for the day.
Closing is good. Markets are headed higher. We maintain the same view. Nifty looks too good for till 11,250, 11,300 levels. If any dip from present levels seen till 11,100 levels, that should be used as a buying opportunity. Downside 1150 is support for the targets of 11,250 and 11,300 levels. On the other side, Bank Nifty is also looking good to me. A correction till 27,900, 27,800 levels should be used as buying opportunity. 27,700 should be the stop loss for the upside target of 28,300 and then 28,500 levels.
What about you, Hemen?
Well, Neeraj, it seems fine. We spoke at the starting of the show, so 11 to 11.4 are my targets for the this series. So any dips, even I would agree with what Sumeet said, that seems like a buy, and lots of stocks across the board which are shaping up well. I think after a few days IT would be turning around, so I think things are fine. Market breadth is cool, so corrections I would use to go add further in terms of the indexes.
I guess there's not much more to say when the market has done what it has done. The going is good, don't bet against it. Maybe that's the one piece of advice people would give right now. Sumeet, as well as Hemen, thank you so much, gentlemen, for joining us today and giving us your thoughts. Really, really appreciate your time. But on that strong note from the equity markets, in India at least, it's a wrap on this edition of Countdown from Devini and me and the team that put this show together. Thanks so much for watching.